All right, just finally wrapped up another week. Okay, and we're closing out February as well, heading into March. So, yeah, this year is flying by. But yeah, back to this back to this video. I don't want to get off topic. My intent with this video is to dive into this week's action with a little bit more detail. Um, and see how this week played out according to our weekend newsletter. The weekend newsletter is, very different, I want to say, from the newsletter I sent out throughout the week. Now, the reason being is, the weekend, I personally use it to uh, zoom out of the market, zoom out of that 1 hour time frame, that 4 hour, and go back to the daily and monthly, and just get the big overview and start breaking it down from there. So, and in doing that in the weekend, I kind of, I'm not a big forecast guy. I don't predict what's going to happen next month, next week, but I kind of give an overview of what we're looking at heading into this week. Okay, and as always, we let Monday set the tone. Mondays, from my experience, I have learned to stay very patient on Mondays and let the market set the tone. In doing that, it makes the week much easier because, we're in an environment that is constantly changing, not only from, yesterday's session into the next session, but, sometimes the price action can be completely different from last week. Okay, and if you're stuck on last week's price action, which, hey, it could have been like extremely bullish, and you're carrying that sentiment into this week, that perception, you being in that perception, carrying that into the first session of the week on a Monday, it can get you in a lot of trouble. So, yeah, that's personally what I like to do is Mondays, lay off the gas. Let's see what develops. And what I have learned is, if you can do that, the next 4 days of the week become extremely easy. So, yeah, aside from that, diving into this week, as I mentioned in week number 8, the markets in these bigger time frames, I've been repeating myself. Like, I probably sound like a machine, saying the same thing over and over. But since, October, November, I've been mentioning to readers that the market in the bigger time frames is doing absolutely nothing but trading in a very big sideways movements. Okay, while all, we got half of the market participants arguing that we're in a super bull case scenario, and then we have the bears, every day the sell's gonna come. They didn't come today, they come out the next day saying, hey, the sell's gonna come, it's about to happen. And while we have those two parties, arguing on seeing who's going to be right, the market has gone nowhere for the past, let's see, October, November, December, January, February, 5 months. 5 months of range trading. I love range trading. Make a lot of money in range trading. So, in these bigger time frames, that's all the market's doing. So, ignore all that stuff, and I promise you, performing is going to be much easier. So, yeah, we're looking at the daily time frame. Such a huge range. Look at that. 70.43 upper pivot, which is January's high. And we're holding above February's low, which is 67.51. Okay. All the market is doing on the daily time frame is we're holding above or trading in between these 2 points. These are our 2 pivots on the daily time frame. January's high, February's low. That's all I need to know. This is our bigger picture. Okay. Aside from that, I don't need to be looking at this time frame unless we are visiting, the extreme high or that extreme low. Then I'm interested. But aside from that, we're just in the middle. So that leaves us nothing to do but focus on the smaller time frames, and that's exactly what we did on week 8. So let me see. So here we go. Entering week number 8. All right. So from this weekend's newsletter, if you can see this screenshot right here, this was our bigger picture that we were focusing on in the week. I'm not going to be, our biggest picture is that daily time frame, right? I showed you the pivots, 70.43, and I think the lowest pivot is 67.51. What am I going to do with that? I'm a day trader. There's, like I said, I don't need that. I just know that is our widest range. So to make things simpler, in the weekend, one of the range that I was focused on, the first range I was focused on was pulled from the 4-hour time frame. Okay, and that was set from the previous week high at 69.31. Okay, I got it marked right here. And the previous week low at 67.91. Okay, so we closed out, last Friday, which was February 20th, at the highs, at a very important high. It was a breakout level. So heading into this week, being in the upper part of this range, or let me put it in these terms. Okay, as long-time readers know, and mentees, in the past, every time frame, the market is doing something different. Okay, the market can be in breakout mode in the 1 hour and 15-minute time frame. Okay, but entering this week, when we're looking at the market from a 4-hour time frame perspective, the market is stuck in a consolidation mode. Okay, and as I gave you that range, it was set from 69.31 down into 67.91. The market is stuck just consolidating within here. Okay, and to set off any movement, the market needs to break out of this range. So that means that as we were entering this week, and we're pushing up into the highs of this range, for any further momentum, the market needs to exit consolidation mode in the 4-hour time frame and set off a breakout and get the 4-hour trending. Now, breakouts and breakdown trades, higher risk, lower probability. Okay, that's the way it is. That's the way it's always been. Okay, so getting above 69.31, as I mentioned in week number 8, it sets us up to expand into the higher time frame upper pivot, which is the daily time frame. So getting above 69.31, our scope is set to target this upper area. All right. That's what we were looking at if we can get a breakout going. Now, Monday session at the cash open, if you guys remember, the market impulsively, right at 6:30 a.m. Pacific, the market impulsively pushed up into 69.31. Of course, the market got rejected and pushed the market lower. Okay, and the biggest takeaway from here is that, hey, the market is remaining in a consolidation mode on the 4-hour time frame. The market's going to continue. If we can't get above 69.31, hey, what does that mean? That means that the market just remains in consolidation mode. Simple as that. Okay, so yeah, entering this week, this was our range of focus. Now, if we know 69.31 is a breakout level on the 4-hour time frame. Okay, but as we zoom into that, okay, this is a range that I have gone over and over and over. We had the market on the 1-hour time frame stuck from the high at 70.11 down to a low of 69.31. Okay, after setting off a breakout move, okay, from our buy zone, which is our home base, the market attempted to consolidate. Okay, buyers failed to establish that market value here, and sellers broke down 69.31, which triggered a sell. Okay, so on the 1-hour time frame, this is our resistance. This is what we're dealing with. So, when we're looking at the markets, and as I said, Monday session, we're getting up to 69.31. We know two things. We know that the markets, from a 4-hour time frame perspective, is stuck in a consolidation. Okay, and getting into that 69.31, we know and we fully understand that the market needs to trigger a breakout above 69.31. Okay, so that's what we're looking at. Now, as we zoom in on the 1-hour time frame, as we're getting into 69.31, something I've been very clear about is that 69.31 from a 1-hour time frame perspective is a breakdown level. That means that sellers attacked this level and broke the market down below. Okay, and for the market to look better, 69.31 needs to be reclaimed. So number one is price has memory, especially at significant areas of the market. And a pretty big significant area is 69.31 on this 1-hour time frame, which triggered a sell. So, Monday session, we're pumping right impulsively, and that gets you, like, oh, the market's moving, I need to jump in, and you take along, you're taking along at an area where sellers were present. Okay, it's a pretty significant area. Price has memory, and coming right into it, it's not a surprise we were smacked down. So, that's why I couldn't stress it enough. 69.31 was a huge level into this week from a 1-hour time frame perspective, because it's a breakdown level, and on the 4-hour time frame because that's the upper end of the consolidation the market's in. So yeah, we got rejected at 69.31 on Monday, which triggered a sell a down day on Monday and set a low at 68.32. So if we go back to that 4-hour time frame, okay, we got rejected here. So, being rejected, like I said, we got rejected, so that means the market is just remaining in a consolidation in the 4-hour time frame, and we're just going to continue trading from 69.31 all the way down to 67.91. That's our range of focus. So, knowing that we're trading inside of that range, we got rejected Monday. We set a low at 68.32. Into Tuesday's session, from that rejection, we're giving the ball over to sellers, and we're saying, okay, sellers, you rejected us. You kept the market in consolidation. Are you going to follow through below Monday's low? Following through below Monday's low, okay, if we break down Monday's low, that would leave us to target the lower end of the 4-hour range. Okay, we'll make a full 360 back down. Okay, and that would prove our point that market's just in consolidation. So entering Tuesday, we had a bullish pivot set at 68.75, and we had the short trigger at 68.32. So into Tuesday's session, the only way to get long would be to see if sellers broke down under 68.32 and would be able to find continuation lower. Would fail to find continuation lower under 68.32. Okay, and in doing so, reclaiming back over 68.32 would get us long, and it would just keep us, within this 1 hour range. Now, breaking above 68.75 would signal extreme market strength. Okay, and that's exactly what happened. We on Monday's night newsletter for Tuesday, we were looking to get long only on a failed breakdown of 68.32. Right here, sellers spiked under, and buyers quickly reclaimed back over. This was a long entry, and we crossed off all these targets inside of this 1 hour range. Okay, but holding 68.32 swung us right back up into 68.75. Okay, 68.69 worked as well. And as I mentioned, for any further momentum in this scenario, bulls need to break above the bullish pivot 68.69. So, we got long at the failed breakdown of 68.32. Longs worked on a breakout trade above 68.69, 68.75, and bulls broke out, followed through on it, and it put us back to revisiting into Wednesday's session 69.31. Okay, so going back to the 4-hour time frame. Okay, from the rejection on Monday, we got that failed breakdown at 68.32. Sellers failed to break down Monday's low. This set off longs. We broke above 68.75, and this set us up to revisit into Wednesday's session 69.31 once again. And into Wednesday's session, buyers triggered the market out of the 4-hour range, attempting to set it in a breakout mode. Okay, so on Wednesday's session, I had the long trigger set at 69.12. Okay, longs worked above 69.31 as well as a quicker day trade. Okay, we popped out of it and we closed the session above. So heading into Thursday's session, it was very clear. Would the market be able to maintain value above 69.31? In doing so, kept bulls in control. And ultimately, we're targeting the upper part of that daily time frame range. Now, what we saw on Thursday was that bulls failed to maintain that breakout. Bulls failed to maintain above 69.31, and getting under 69.31 set off a failed breakout on the 4-hour time frame. And all this did was sink the market back inside of this 4-hour time frame range. And sinking back inside, we just resumed trading back inside of it. That's all it did. Okay. If you want simpler terms, all the market did was look above previous week high, fell to hold, and we sunk back inside of the previous week high and previous week low range. So, that's what happened on a 4-hour time frame perspective. On Thursday, zooming in, viewing from the 1-hour time frame, it goes back to saying, this is a breakdown area. This is an area where sellers stepped in and triggered a breakdown. This is their territory right here. And, as I mentioned, price has memory at significant areas. And when the markets, in this instance, sellers triggered a breakdown, this range right here now belongs to sellers. It's their territory. And what that means is that any rallies into this zone, the closer you get into it, this is a seller territory. They're going to be like, hey, this is ours. We're going to smack it down. And what they do is they smack it down. Okay, so that's why I always advise, as we get near breakdown areas, like, hey, it's time to manage risk. If we're long, start trimming, start tightening up stops. Okay, and I also mentioned, like, hey, this is not the area to chase, to FOMO, or to make things happen, because we don't know if sellers are present in this area. And if they are, any rallies into this area, they can get smacked down. And getting smacked down, we don't know, how aggressive that smackdown will be. Is it gonna, push us down to a new low? Like, we don't know until it happens. So that's just us managing risk. Okay, and as we get into this breakdown area, we see sellers immediately step in. Boom, stepped in. Monday right here, we came right near it, smacked down. Okay, so into Thursday's session, we're in their territory, and what we want to see is if buyers are strong, we want them to hold market value inside of this breakdown area. And a good sign to see would see if we dip underneath, but buyers come right back up and reclaim. That shows us that sellers are getting weak in this area. That's a good sign to see, but we didn't see that this week. Getting into this breakdown area, buyers failed to hold, and sellers stepped in and rejected the market out of their territory. They smacked us out. They smacked buyers down out of their territory. So in Thursday's session, getting rejected, buyers held the market at Tuesday's bullish pivot, which was 68.75, and we set a low at 68.70 for Thursday's session. So heading into Friday, as I had on the newsletter, was, all we can do on the buy side is to see how strong sellers are. If sellers are strong, from the rejection at 69.31, we want them to see if they can break down below Thursday's low, 68.70, and follow through lower. Okay, that would be a strong scenario, and that would show us that sellers at this area remain strong. Okay, because the initial breakdown right here took us down to a low of 67.91 before we saw buyers step in. Okay, so yeah, we failed to hold. We were just an area to manage risk. To me, it's just the habits. We manage risk. We broke down. And into Friday's session, sellers attacked and attempted to find follow through below Thursday's low, which was 68.70, and buyers immediately stepped in. And attempted to reclaim. We saw some sellers, and towards the end of the session, buyers pumped back over, and longs worked as a quicker trade back over 68.70, giving us about 20 points or so. So yeah, that's all that happened. A lot of trading took place on these smaller time frames, and heading into next week, how this carries us into next week is that nothing has changed. Okay, we're still, from a 1 hour time frame perspective, the market's in between the breakdown area and our home base, and we're in the middle of it. And I always advise on being very careful in this middle, because we don't know where the market's, going to go. It can swing up, we can swing right back down. The best areas to engage are, over here, not here in the middle. But yeah, heading into next week, I hope you use this info, carries us. Nothing has changed. The market didn't move anything at all. Viewing the market from a 4 hour time frame perspective, the market entering this week was stuck within this range. We attempted to break out, and in doing so, we were looking to target the upper part, of the daily time frame. Buyers failed, the market sunk back in and just remained within the 4 hour time frame range. Okay, that's all that happened. Nothing significant. So, yeah, and something, we always want to be intentional. And our trades worked great this week. We had a great trade on Tuesday. Even Thursday at the retest of the bullish pivot. Okay, Friday session, longs worked above 68.70. But one of the most important takeaways I want to say, especially, if you want to continue to grow here, is the risk management, because you're not going to get far without risk management. And it's the risk management this week taught us that, you got to understand the market in the bigger time frames, what it's doing. Okay, and the 4 hour time frame was showing us that the market was in a consolidation. Okay, and when we're reaching that extreme upper pivot, you got to be cautious. We're not looking for failed breakdowns there no more. We're looking for a breakout trade, and you got to understand that those are higher risk, lower probability type trades. Okay, you got to understand that. If you know that, you got to be able to cut losses quick if you're looking to take a trade like that. I myself like to lower position size, because they don't always work. So you want to protect yourself, and viewing the market from a 1 hour time frame is, Thursday was so clear. Like, we're in a breakdown area. We want to see if buyers can establish here. I've seen this pattern thousands of times. Like, hey, Wednesday, great day. We broke out higher. Thursday, it's super bullish. We want to follow through on it. Whatever noise is out there. But you gotta be loyal to your technicals and levels, and understanding that we know this is a sell zone. This range right here belongs to sellers until buyers can come up and hold here, absorb sellers. Then the market's going to look better on the upside. But until then, this area here is a seller's territory. And any rallies into it can continue to get smacked down. So, I'm going to cut this video off. Went a little bit too long, but yeah. This is this week's review. And like I said, the biggest takeaway in my opinion was understanding market structure in different time frames and the risk management that it allows us to take in place. Okay, if we're not winning trades, we're learning. There's no such thing as losing. So yeah, hope this helps. A little bit more in-depth review, and this is gonna be much better for us to understand on how it carries us into next week. So thank you.